Hello, good morning, ladies and gentlemen. How are we all doing today? Let's confirm that you can hear me and can see my screen by typing hi in the comment section so that I know that we are good to go this morning. So I would like to see some feedbacks. If you can see my screen and you can hear my voice, please type in hi in the comment section so that we can get this started. Okay, let's see what we have here. I'm trying to load up my comment section. Let's see. All right. Okay, here we are. Hey, Carrie, I see you. Good morning to you, Carrie. How are you doing today? 1014, good morning to you too. Thank you very much for that positive confirmation. Who else is there? Please tell me if you can see my screen. Let me know in the comment section. I need one more comment, please. Okay, thank you very much, Gabriel Panzaru. How are you doing today, Gabriel? Thank you very much. All right, with that being said here, I'm so excited to welcome you to yet another promising session on the X-Trend Speed Live. My name is Sharif Daramola, and for the next 1 hour, I'm going to be your host, where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us today. And for those who are joining us for the first time, you are highly welcome on board. I'm so excited to have newcomers in the house. And what we simply do here is to gather here in anticipation of the New York session to identify potential trading opportunities ahead of the day. And we do this on a daily basis, 10 a.m. UTC. And we have pairs we have been monitoring since the beginning of the week, and we come here to review how well these pairs are doing and how to manage the trades that we have running, and then anticipate what to look out for ahead of the New York session. So you are welcome once again and glad to have you around. So with that being said, let's dive right into the business for today. Now, the first thing we are going to be doing as usual is to keep tabs with the fundamentals, and I'm so excited to let you know that today is going to be a very busy day, and the much anticipated consumer price index is coming up today, which obviously is an inflationary data which gives us an insight into the inflation status of the US economy. And whatever data comes in today will also be a determinant factor in the interest rate decision coming up next month. So we have an expectation here. We have a previous data coming in at 0.4%, and we have a consensus projection of 0.4, which is also on the same level. As we might be seeing something different, we don't know yet, so we are going to be looking forward to that. So this data is coming in the next 2 hours 30 minutes from now. And then this other one here, the year on year, is the annual CPI inflation, which the forecast to hold steady at 5%, while the core CPI is expected to rise by 5.5%, down slightly from the 5.6% increase recorded in the month of March. So we are going to be looking forward to this event, and obviously majority in this market are anticipating this event, and we have already been seeing the reflection of this anticipated on the chart as price action. So with that being said here, and with the information we have gathered here, let's scale back into the chart to look at things from a technical standpoint. And the first commodity we are going to be looking at this morning is the US oil spot. On the US oil spot, we have been witnessing a choppy situation since yesterday, since Monday actually, as we have seen how price action has been caught within a range between the $73.50 level and the $72 area to further emphasize the level of indecision in this market. And if you look at this whole structure, how did the week start for us? The week started on a bullish note actually, and I told you how I took advantage of the breakout of this resistant line here at the $72 area to capture my first buy position for the week. And I told us all on Monday morning that it depends on how price action reacts to the structure that will determine if we are going to be having a buy position or sell position at this point. And for those who are not part of our live session yesterday, so that you can have a better understanding of how we got to this point and why we are actually making that decision around that area. And another thing is to let us know the importance of that structure around the $73.25 area. So in that regard, I want us to look at the 4 hours time frame here, which after plotting out price action activity since the month of April, that is the first day of the month of April, we can see how price action has been on a bearish momentum. And to further emphasize this, when we connected a series of lower highs and a series of lower lows, we have this descending channel figured out at this point. And look at this area here, look at the resistant line of the descending channel, look at it here. So we can see price had consistently respected that trend line. At the point price gets into that structure, we saw how it was difficult for buyers to break out of that level. So sellers jumped in at every point in time to negate all buying attempts in that area. Now, if we zoom into what has been happening in this market since the beginning of the week, things become a little bit more interesting. And as you can see here, we saw the after price action got into the resistant line of that descending channel there, we begin to see selling pressure at that point. And what we decided here yesterday is that if the selling pressure continues, then a breakdown of the $72.60 level, retest of that structure, will give us a sell position in this market. So let me show you how we sold again during the New York session yesterday. So we saw the breakdown happen here, and during the New York session, we saw our price action moved about over 100 pips, 140 pips in our direction before this bullish momentum happened. And I do hope you moved your stop loss accordingly to lock in some profit. If you had done that, you will have locked in about 50, 70 depending on where you moved your stop loss. And a worst case scenario here is a break even. And during the live session, I'm going back into the 4 hours time frame again. I wanted you to see something here. So during the live session yesterday, we discussed something about the structure. So I told us all yesterday that if price action continues below the $72 area, then we'll be looking out for more selling opportunities in this market. But if at any point in time price action breaks out of that trend line and the $72.60 level, we want to be buying the US oil. And this was exactly what happened during the later part of the New York session yesterday to give us that buy position that we took advantage of. So right now we have a breakout of the structure, and we saw our price action moved in our favor, moved about 110 pips in our favor before this whole sell pressure began. And for those who are taking advantage of that buy position, well done to you for being on standby to have caught that move, as you might have taken out some of your positions as price action moved against us at one point, moving your stop loss to lock in some profit. So right now, what are we going to be looking at going into the New York session today? Now look at the structure we have here. We already have a breakout of the trend line, which is a sign that buyers are gradually gaining a momentum in this market. And you all know from a technical standpoint, when price action breaks out of a key structure like this, we expect that price action will come back to do a retest of that trend line at one point, or probably the $72 area, where the appearance of buy pressure on our lower time frame will be welcoming an opportunity to join a trend continuation to the upside. So this is one scenario we are going to be taking note of today. And at this point, you can see price action has dropped. How far will this retracement phase go is the real question we want to be answering at this point. So we have a trend line here and the $72 area, where we shall be looking out for structures that will support that move to the upside. So this area here between the $72.60 and the $72 area is a very critical point in the market where we are going to be looking out for buying opportunity today. Now I would like us to scale down to the 1 hour time frame to see what is happening around the $72.60 area here, which is there a buying opportunity coming in around that area. Probably we could join even before price action gets into the $72 area. So when we scale down into our 50 minutes time frame, what I'm seeing here doesn't look promising for a bullish momentum. So at this point we just need to be very, very patient. Let's remain patient and wait out for structures to mature. We want to see double bottom structures before we want to be joining a bullish move in this market. So that is the first expectation here. So we are looking forward to bullish opportunity above the $72 area. Now another thing that we should also take note of while we continue to monitor price action is the fact that sellers could still come in this market. And remember that we are within the resistance line of that descending channel that we identified earlier. Though we have price action breaking out of that structure, there is still a chance that the breakout of this trend line could turn out to be a false breakout. And what do we want to be seeing on this chart that will make us to shift our bias from being bullish to bearish? Now if you look at what has been happening here since the beginning of the week, one key structure you will notice is that as soon as price got into this area around the $73.50 level, I think I will have to readjust this structure here to suit this current structure. We have the $73.50 level. Okay, I will have to relabel this one. So we have the $73.50 level here. So you will see that as soon as price gets into the zone since the beginning of the week, we have been citing selling pressure resume from that area to negate our bullish attempt. Now this old structure here could transition into a reversal pattern if price finds it difficult to break out of that level. So if we consider the impulsive move that got us to this point, we saw the first rejection here, price dropped into the $72 area. Then we saw price action come back to do the second rejection of this area, and we might likely see price action come back into the structure to transition into what looks more like a double top structure, which from a technical standpoint is a strong reversal pattern. However, this reversal pattern is yet to be confirmed, and the only way we can confirm this is by identifying a neckline which will be serving as a platform upon which we are going to be selling, and at the same time validating the potency of this reversal pattern. So as a result of this, we have a neckline which sits coincidentally with the $72 area here, where the breakdown of the structure will definitely give us a signal that we are going bearish in this market. So a breakdown of the neckline at the $72 level, a possible retest of structure of the resistance line. At this point, price action is back into the seller's territory, as price action will have remained below the resistance line of that descending channel. So this is how we are going to be trading the US oil spot today. So you would agree with me at this juncture that the $72 area is going to be serving as a major determinant of price action for today. So for buying opportunity in this market, like I said, we are looking out for buy pressure above the structure, price action retesting the trend line, then we are going to be in to join the bullish momentum and then add more position if price action breaks out of the $73.50 level. And if it so happens that price action drops below the structure, then we are going to be in for a sell position as we continue to look out for more opportunities at the retest of that structure to ride the move all the way to the downside. So these are the things we are going to be looking at to take advantage of any bearish momentum in this market. So let's keep this in mind. You might want to screenshot my screen so that you can use it as a reference point to use to guide your trading activity for today. Then one more thing I would like to further clarify here is that if price action does not drop into the $72 instead and it continues to range around the $72.60 level, we see buy pressure on our lower time frame, we see how sellers are finding it difficult to drop back below the structure, then we could get ready to buy at the breakout retest of a reversal pattern on our lower time frame. Then we could join the trend continuation to the upside. Then a further breakout of the $73.50 level will welcome more opportunities to add more position to our current existing trade. So that is how we are going to be trading the US oil spot for today. If you have any questions, feel free to let me know right in the comment section. So that is that on the US oil spot for today. So we shall be moving on into the US tech, which is the next option for the week. If you have questions, feel free to let me know right in the comment section. Okay, so the next option, like I said, is the US tech. And on the US tech, since yesterday, we have been on a profitable run on the US tech. We have been selling the US tech since the beginning of the week, and let's quickly run through how the week has started for us here on the US tech. So the first thing we observed at the beginning of the week was the fact that price action was a little bit choppy, as we saw this whole situation where price was trapped within the 13,265 and the 13,230. And you all know what we look out for when price action gets into this kind of simple flat channel. We want to wait for price action to either break out of the structure or breakdown of the support line for trading opportunities. Though we had a sell position at the beginning of the week, but it didn't last long. After a 40 pips move, we saw buy pressure resume, taking us out of that position. And at the same time, again on that same Monday, later on that day, we saw another buy opportunity, giving about 40 pips move before we were taken out again from that trade. And with the continued selling pressure here, I told you how I had a sell position here yesterday. And for those who missed out on this opportunity, I told us all that we shall be looking forward to a breakdown retest of the 13,230 to be part of the trend continuation to the downside. So since yesterday, we have been selling the US tech, and if we consider how many pips this has been, so we have over 90 pips in profit right now for the first position. And for those who took advantage of this opportunity at the 13,230, you have about 58-60 pips in profit at this point. And for those who also sold below the 13,200, so we have about 3 positions running right now. You will currently be running with about 22 pips in profit. Now you all know what we want to be doing right now, especially for those who had already taken advantage of the sell position. We want to be moving our stop loss accordingly to lock in some profit at this point. And the most appropriate area, I think, from this current structure is to lock it anywhere around the 13,200 area, which happens to be the last key structure in this market. So with that being said, here with the stop losses moved accordingly to lock in our positions, what is going to be our next line of action for today? Well, before I go into the details of what to be looking out for today, I want us to quickly run through the higher time frame so that we can have an holistic perspective of what is really going on in this market. And at the same time, for those who had missed out on the first session of the week, so that you can also have a perspective into why we are making the decision we are making at this point. So the next thing we are going to be doing is to scale up into the daily time frame, and this is the daily time frame right here, and we are going to be focusing on trading activities since the beginning of this year. And if you look at this from an holistic point, it is quite obvious that price action has been bullish in this market. Now look at what has been happening since the beginning of the year. Price action had consistently found higher highs and higher lows, and if we connect the series of higher highs and higher lows together, we have an ascending channel to use to guide our trading activity. Now another interesting thing that further emphasizes the level of strength the buyers have in this market was the breakout of the 12,800 area, an area which has been a strong selling niche since the month of August of last year. So during the first day of the month of April this year, we saw the breakout of that structure, and after the breakout happened, we actually thought that price action will continue to move significantly to the upside. But one interesting thing we saw here during the month of April was that throughout that month we saw our price action remain trapped within that range between the 13,220 and the 12,800 to emphasize the level of indecision in this market. And with this whole simple setup we have here, that is the flat channel, you know what we want to be doing. We want to remain patient to look out for trading opportunities, which is likely going to be coming in the form of either a breakout of the resistance line for buying opportunities or breakdown of the support line for selling opportunities. But if we look at the structure, let me zoom this in a little bit so that we can see things more clearly. If we zoom into the structure, you will see that since the last week of last month, you will see that though price had broken out of that structure at one point in time, I think a couple of times, but as soon as price breaks out of that structure, we saw our sellers come in to negate all bullish attempt in this market. And since the beginning of this week too as well, we have been citing that situation to happen here. We had a break above of the structure, and yesterday and today we have been witnessing selling pressure bringing us down into the structure, and thank goodness we are part of this bearish move as we're able to scoop over 100 pips on this one and the multiple entries we had here. So going into the New York session today, what is going to be our plan? Will the sell pressure continue below the $13,220 area to incite a bearish move back into the support line of that ascending channel at around the 12,800? Or are we going to be having a situation where a trend continuation pattern will evolve, taking price out of the 13,220 to move to find new highs? So these are the things we are going to be looking at for today. So in that regard, we are going to be scaling down into a much more lower time frame so that we can see our majority in the market has been reacting to the structure to identify and project what our next line of action will be. So in that regard, I want to scale down into a much more lower time frame. But before we go into the 1 hour time frame, let's see if we could find a setup on the 4 hours time frame. So right here on the 4 hours time frame, this is what we saw at the beginning of the week. The first thing first here is the fact that the 13,300 has been a level where sellers had continued to negate all bullish attempts in this market. And if we go to as far back as the month of April last month, we saw our price had consistently found higher lows in this market. But one interesting thing about this whole structure is the fact that price is yet to find a higher high to establish a bullish trend continuation pattern. So in that regard, the 13,300 had been negating all these attempts at this point. So it's looking a little bit bearish in this market because of this old structure that we have here, but we cannot jump into conclusion as we still need further confirmation to establish that. So now at the beginning of the week, what we were looking out for at this point is that we expected that the continued selling pressure that we are noticing around this area since the beginning of the week could turn out to be a retracement of that impulsive move that started last week. So we had this impulse that began last week here, and as soon as price got into the structure, we saw selling pressure one more time, and we said we might likely be seeing a retracement of that impulse leg. And because of this, we used our Fibonacci retracement tool to project where the retracement phase could end before another wave of bullish momentum will happen. So we projected between the 50 and the 78.6% of the previous impulse leg, which happens to be our golden zone area. And from the look of things, price action is gradually approaching that structure. So let's see how far this move is going to go. Will it get into the structure? Remember, we have our TP target anywhere between the $13,120 and the $13,015 area for our TP target zone. And we also agreed here that depending on how price action reacts to this zone will now determine if we are going to be adding more sell position or get ready for the second wave of that bullish momentum that started last week. So we said price drops into the structure. If it turns out to be a double bottom structure, a reversal pattern, then we are going to be getting ready for another wave of bullish momentum. So now let's scale back down into our 1 hour time frame. For those who have a sell position running, I've told us that we are going to be moving our stop loss to secure the current sell position. And for those who having who missed out on this opportunity, let's see if market can present an opportunity for us to join. Now let's go back into the 1 hour time frame, and this is what we can see here on the 1 hour time frame. So we have this structure here, and remember we have a 13,200 level, which had been a very strong support line since the beginning of the week. Look at it here, as we saw how every attempt by the sellers to break down the structure was negated by the buyers, and not until early hours today that we saw the breakdown of the structure. And from a technical standpoint, whenever price action breaks down a key structure like this, we expect that at one point in time price is likely going to come back to retest the structure to incite another wave of bearish momentum to the downside. So because of this, now for those who had missed out on this opportunity, we want to remain patient to wait for another structure to mature before we want to be joining. So we can look out for a price coming back to retest at 13,200, and if selling pressure resumes around the 13,200 level, then we want to be getting ready to join. And if for those who have an existing position running, you want to be adding more position to your existing trade. So that is how we are going to be selling the US Tech 100 for today. Then another thing that I would like to include on this chart is the trend line, which will help us to feel comfortable in our sell position, and at the same time give us an insight into looking out for more opportunities when we see a structure mature. So since the beginning of the week, we identified this trend line after connecting the series of lower highs, and price action has consistently respected our trend line so far. So as long as price action remains below the trend line and the 13,200 level, we continue to look out for more selling opportunities in this market. So the trend line we have here is going to be serving as our yardstick for trading activity today. So let's map this out on our chart and use it as a guide for trading opportunities for today. So as long as price remain below the trend line, we feel comfortable in our sell position. Now, in as much as we are looking out for selling opportunities in this market, we should not ignore the potentials of buyers too as well. And if we consider the fact that price action has been bullish since last week here, look at what we have since last week. We saw the bullish momentum. We might likely see price action prematurely incite another wave of bullish momentum. So what do we want to see on this chart that will make us feel comfortable to buy the US Tech 100 today? Well, like I said earlier, we already have a key trend line which we said we are going to be using to guide our trading activity for today. So the trend line here also shares a beautiful confluence with the 13,200, and one thing about the 13,200 level is that it has been a very strong demand zone since last week Friday. So if price action climbs up and comes back above the structure, then we are back within the buyer's territory. And if that happens, price action would have broken out of that trend line, which will have given us a sign that the trend line may no longer have the capacity to reject all bullish attempts in this market. So a breakout of both the 13,200 and the trend line will be a beautiful signal that buyers are gradually gaining some momentum behind the scenes. Now, if the situation happens, remember at the breakout of the structure, we don't want to jump into conclusion by having a buy stop order yet, as we still need price action to give us further confirmation. So since the beginning of the week it has been bearish, so we need some level of confirmation that buyers have finally come to stay in this market. So immediately we have the breakdown of that breakout of that structure. We want to be scaling down into our lower time frame. It could be your 10, 5 or 15 minutes time frame to look forward to retest of structure where sellers find it difficult to break through the trend line back to the downside. And if this happens, then we are going to be getting ready to buy. And the buy potential in this market has a tendency of giving us multiple entries, as we have structures like the 13,220 and the 13,265 area, where breakouts of the structure will definitely welcome additional position in this market. Then we also have another one here, which happens to be the highest area where price action has been for this week, at the 13,300 area. So a breakout of the structure will definitely give us more opportunities to add more position to our existing trade. So I implore us to be on standby to catch these opportunities. If you have any questions, feel free to let me know right in the comment section. So I will be taking the next 10 to 15 seconds to read through the chat and see if there are any questions before we move on to the next pair. All right, okay, 4114. Okay, I see your comments. 2083 4114 again. Christina 1977, and I see your comment there to 8603. Good morning to you guys, and glad to have you all around with us. So in the absence of no questions, I want to assume that we are good to go this morning. So let's move on to the next pair. So the next pair we shall be looking at this morning is the GBPUSD. And on the GBPUSD, we have been selling for the last 48 hours in this market, as we were able to capture a sell position right after the breakdown of that support line sitting at the 1.26250 level since Monday's New York session. We sold around that area. So now what was the basis behind, what was the idea or rationale behind selling around that point? Well, the first thing we observed at the beginning of the week was price action trapped within a range between the 1.26550 level and the 1.26250 area. And you know what we look out for whenever we have this kind of simple setup? We want to see price action either break out of the resistance line or break down of the support line for trading opportunities. And during our live session on Monday, we were around here where price action had dropped below the 1.26550 level, and with a sell stop order just below the structure, we had our first sell position for the week triggered. And price action even gave us more opportunities to join. If you had missed out on that first one, price came back to retest structure, and boom, we saw our price move to as far as the 1.25750 level, giving us about, how many pips was that? About 50 pips move before we begin to see this bullish pressure come in this market. And since in the last 24 hours here, you will notice that price action has been quite choppy in this market, as price action is currently trading between the 1.26350 level and the 1.26080 area, giving us a level of indecision in this market. And this is well connected to the CPI event that we are looking forward to today, which is coming up in about 2 hours from now, and everyone is really anticipating this event, hereby giving us this level of indecision we are seeing in this market. And with this kind of situation here, it is quite obvious what we want to be looking out for. Remember, whenever we have this kind of simple flat channel that you are seeing on your screen right now, the only way we want to be trading this is by remaining patient to wait for either a breakout or breakdown of this channel for trading opportunities. Personally, I did have a buy position here. I told us all yesterday that we should have a buy position. If you have a buy position here currently, you will be running in a loss right now of about, let's see how many pips is that, of loss, about 8 pips loss right now. And remember, our stop loss is sitting just right below the 1.26080 area, which is dovetailing to about 19 pip stop loss around that point. So let's see how far this move is going to go at this point. However, as we head into the New York session today, what is going to be our plans? Are we holding on to the bullish buyers, or are we going to be getting ready to sell? Well, the first thing I would like to do here is to take us into the 4 hours time frame, where I want us to look at things from a critical standpoint. Now, if we go to the 4 hours time frame here, this is the 4 hours time frame, and the first thing you would observe is the fact that price action has been bullish in this market. So if we connect the series of higher lows here, we have a beautiful bullish trend line which has been supporting that momentum since the month of March. However, at the beginning of this month, we saw a deviation from that momentum, as we saw a new trend line where price action found new higher lows here in the last couple of weeks. Now we have been seeing this trend line which we talked about on the 1 hour time frame, and on Monday we saw the breakdown of this trend line, which is a bearish signal, and in fact price action came back to retest the structure, and it appears that sellers are still in this area to incite that trend continuation to the downside. So at this point in time, it is very important that we remain patient, as anything could actually happen. And to further buttress this whole structure we have here, I have a trend line which, after connecting the series of lower high, is giving us this bearish trend line you can see on your screen. So this trend line today is going to be our yardstick for trading activity. So what this simply means is that if price action remains above the trend line, we shall be looking out for buying opportunities, but if price action remains below the trend line, we look out for selling opportunities in this market. So with this information we have gathered here, you will see how this whole structure is what we are going to be using to guide our trading activity for today. So now look at what we have here. We have look at what has been happening between the 1.26350 and the 1.26250 area. So despite the fact that we have been seeing some buy pressure in the last 48 hours, one thing for sure here is that as soon as price gets into this range, we have been seeing multiple rejection of that level, which further emphasize the strength of the sellers at this point. So it's more likely that the selling momentum is going to be coming in here today, so we want to anticipate that too as well. So in order to have a better view of what is going on there, we will be moving right into a much more lower time frame, which is the 1 hour time frame. Now, like I said, on the 4 hours time frame, we have a trend line already. You might want to map this out on your charts right now so that you can use it as a reference point to guide your trading activity today. So as long as price action remains below that trend line, we feel comfortable in a sell position. Then in addition to that one too is this trend line too. I was able to identify this morning after connecting the series of higher lows in this market, and as you can see, I have a temporary trend line. So a breakdown of this trend line will be giving me a sell position here. So I want to see price action retest the structure, and look at the retest of that structure. It also shares a confluence with that bearish trend line there, and if that happens and selling pressure continues below the structures, right below the 1.26250 on our lower time frame, we get ready to sell. Then we look out to add more position to our existing trade. had the breakout retest of the 1.26080 area. So this is how we are going to be selling the GBPUSD for today. So anywhere right below the trend lines you see on your screen right now is where we shall be looking out for selling opportunities, and this is further buttressed by the continued selling pressure we have been observing since the beginning of the week, just around the 1.26350 level and the 1.2625 area. So because of this point in time, we have a very strong selling niche around that area. A breakdown of the bullish trend line will now confirm the strength of the sellers in this market. So let's be on standby to catch that move. Now, for those who are still holding on to a bullish bias here, that you're thinking of buying the GBPUSD today, what I would like to say here is that the only reason why we are going to be buying the GBPUSD today is to see price action take out all the sell position that we have been observing around this area in the last 48 hours. So we want to see price action take out all the sell position here by breaking out of the 1.26350. Take the advantage of joining that move right away from that level with a stop loss somewhere around this area, around the 1.26100 area, dovetailing to about 25 pips thereabout, so that we can capture this whole situation as price action is likely going to come back, retest either the 1.2625 or this trend line to inside another wave to the upside. So we want our stop loss to be as wide as possible, so about 25 pips stop loss seems most appropriate after the breakout of the 1.26350 area. And if that happens, then the trend line here, which we identify, will now be a guide to guide that bullish momentum all the way to the upside. And the further breakout of the 1.26550 area will definitely welcome additional position on the GBPUSD. So this is what we are going to be looking forward to on GBPUSD for today. I hope you screenshot my screen so that you can use it as a reference point when you're about to make your individual decision on this pair. So that is that on the GBPUSD. If you have any questions, feel free to let me know in the comment section. So I will be moving on to the next pair, which is the XAUUSD, that is the gold. And on the gold commodity here, price action has been bullish since the beginning of the week, but we have been seeing a choppy situation as the bullish momentum hasn't really been hasn't held on for so long. So the first buy position we had this week was just exactly above the $2,025 area, and this was on Tuesday morning. We had this buy position, and then we also had a second buy position at the breakout of the $2,029.50 level. And this was where we were during the live session yesterday. I told us all here that this bullish trend line we have here is going to be our guide, and I told us that we could have a breakout of the $2,029.50 level, and that price action is likely going to come back and retest the trend line along the $2,025 area to incite another wave of bullish momentum. And I hope you are able to capture that move as we saw price action move over 120 pips after the retest of that $2,025 mark. And if you had moved your stop loss accordingly before the sell pressure resumed here, you would have had probably about 100 or 50 pips thereabout locked in before being taken out of your position. So at this point in time, we are at a critical point right now where price action in the last six hours has been trading just right along the bullish trend line, which happens to be our key level for the week. And one interesting thing about this whole structure is that the trend line shares a confluence with the $2,029.50 level, and we have been noticing buy pressure coming in from that area. So will this turn out to be an opportunity to buy? For those who had bought around that area, well done to you for being on standby to have caught that move, as you will currently be running with about 26 pips in profit. Please at this point, kindly move your stop loss to lock in some profit at your break-even area. Lock in this position, as there is a tendency that sellers might likely come in this market. So going into the New York session today, we have two things that we are going to be looking at around this area. Now, I want to talk about the possibility and potentials of sellers at this point in the market. So if we are going to be selling the XAUUSD after considering the bearish impulse leg that started last week Friday, remember after the NFP data came in a positive beyond expectation figure, we saw the price of gold crash back into our key level at the $2,000 mark, and the bullish momentum we have been witnessing here since the beginning of the week may likely turn out to be a retracement of that impulsive move. As you can see, the $2,035 area had been a very strong rejection for the buyers in this market, giving us a clue that sellers are still strong around that area. And if we connect the series of lower highs since last week, you'll see we have a trend line figured out which emphasize the level and strength of the sellers in this market. So as long as price action remains below that structure, it's going to be looking more bearish at this point. But for the fact that price action is sitting on our trend line, we will be careful of just joining any bearish move, as a breakdown of that trend line should be what we are going to be looking out for, confirmations to sell the XAUUSD for today. So a breakdown of the $2,029.50 level would have broken down the bullish trend line, giving us more opportunities to add more position at the retest of structures to the downside. And if you look at this old structure closely, you will see that the market structure here has a tendency of giving us multiple entries, as we have structures like the 2025, the 2020 and the $2015 area, which happens to be zones that we can actually use to take advantage of more selling opportunities if price action breaks down and retests the structure on our lower time frame. So let's keep this in mind for the selling opportunity in this market. So we are looking forward to price breaking down both the $2,029.50 level and the trend line here for selling opportunities in this market. Now, since we've discussed the sell expectation here, let's consider the bullish momentum too as well. And to be part of a bullish momentum here, I had a new chart here where I duly identified some key structures for potential buying opportunities in this market, and this is it right here. So the first thing here is that price action has been bullish actually since the beginning of the week, so we have a trend line in that regard to confirm that. Now I have a key level at the $2,033 area, which is going to be serving as a major determinant of a bullish momentum today, and that key level at one point during the course of this week has been a major determinant of price action, as you can see here. Now, following the impulsive move from the $2,038.50 level, we saw price action drop back into the trend line, and we saw price action evolve into something that looks more like a reversal pattern. And you know, whenever we have this kind of reversal pattern unfolding, the next thing we want to be doing is to identify the neckline of that reversal pattern, which shall be a platform upon which we are going to be looking out for buying opportunity, and the breakout of the 2033 level will now validate the potency of this reversal pattern. So what we are looking forward to buy the XAUUSD today is price should break out of the $2,038 area, and if a retest of structure happen, we had more position to our existing trade, and a further breakout of the $2,038.50 level will welcome more buy position in this market. So that is how we are going to be buying the XAUUSD today. So if we are buying above that area, our stop losses should be somewhere right below the structure, with about 50 pips thereabout to secure our portfolio against any further risk in this market. So let's see how this plays out. So I just explained to you how we intend to buy and what structures to look out for if we are going to be buying, and I also explained how we are going to be selling to if price action breaks down the trend line, retest it, then we want to join the bearish move to the downside. So it's a simple setup we have here, so I wish we'd be on standby to catch that opportunity when it finally happens. And you might want to screenshot my screen so that you can use it as a reference point when you're about to make your individual decision on this commodity. So that is that on the XAUUSD. If you have any questions, feel free to let me know in the comment section. So moving on to the USDJPY. On the USDJPY, it has been a very lethargic start to the week on the USDJPY. As I made mention here yesterday, that price action has been very, very choppy in this market. As you can see, price has been ranging between the 135.300 and the 135.850 since the beginning of the week, to emphasize the level of indecision in this market. And one thing we said about this old structure since the beginning of the week is that we want to remain very patient here to wait out for either a breakout or breakdown of this channel for trading opportunities. And what we saw here during the New York session yesterday was quite interesting. We saw price action break out of that structure, that is the 135.300. remember, we had a buy stop order above that structure here yesterday, and throughout the course of yesterday's trading session we were running in a loss. See, after the breakout of the structure happened, triggered our buy position, we saw our price action drop back below this area and continue to range within this level. And not until this morning we had the first close above of the 135.300, which for me is a sign that we might likely be seeing a bullish momentum for today. Remember, our stop loss is just right below our key level at the 135 area, which is still quite enough of room to for price action to breed before the bullish momentum will happen. So I'm still holding on to a bullish bias here. And for those who are not yet in this trade, let's have a buy stop order above the 135.300 at this point to take advantage of this continuation to the upside, and with our stop loss anywhere around or below the 135.00 area to be part of to secure this current position. So I'm still holding on to a bullish bias on the USDJPY. And one thing I also made mention here is that for the fact that price action is sitting on a very strong demand zone, we won't be thinking of selling the USDJPY at this juncture in the market. The only condition that will make us to sell the USDJPY is to see price action break down that support line at the 135.850, and we wait for a retest of structure, which will give us a confirmation on our lower time frame to now be able to join the bearish move to the downside. And we also talked about the importance of this trend line. Remember, we spotted this trend line on the 4 hours time frame. Hold on a second, let me show you the trend line on the 4 hours time frame. So this trend line has been guiding that bullish momentum since the month of March of this year. And as you can see, so what I'm saying here, I just wanted to show you how important this trend line is on our 4 hours time frame. So let's go back to the 1 hour time frame. So depending on how price action reacts to that trend line will now determine if we are going to be buying from that structure, that is if buy pressure resumes from that area, or we are going to be selling if price action breaks down the trend line to the downside. So let's keep all these options in mind. I hold on to a bullish bias here, but if the contrary happens and price action breaks down the support line here, a retest of structure should give us a confirmation to be part of a bearish move to the downside. So let's be on standby. You might want to screenshot my screen so that you can use it as a reference point to make your individual decision. So with that being said, here on the USDJPY, let's move into the last instrument for today, which was introduced to us by one of us here. I think Norway 76 introduced the Ethereum to us yesterday, and let's see how well the Ethereum has been doing so far in the last 24 hours. So right here now we have this structure. Hold on a second. I think we had it at one. Okay, so we had it here. All right, so we had this whole structure here on the Ethereum. So let's scale up into the 4 hours time frame. This was what we saw on the Ethereum on the 4 hours time frame. Okay, let's go to the daily time frame first of all then. Okay, so on the daily time frame, we saw how price action has been bullish since the beginning of the year. So we had a trend line to emphasize the level of strength of the buyers in this market. However, when we zoom into the current structure, taking into consideration what has been happening since the month of March, we saw that we had a key level at the 1,800, a very strong psychological area considering the round figure of that price. So we had this whole situation here, which has been a major determinant of price action since the month of March. It was a selling niche at one point, and since price action broke out of that level in the month of April, we saw how that level had been a very strong bullish platform, as every attempt by the sellers to break down the structure has been negated by buyers at every point in time. And we agreed here yesterday that it will make a whole lot of sense to look out for buying opportunity above a demand zone. And unless if price action breaks down, retests the 1,800, we continue to look out for buying opportunities in this market. So when we scale down into a much more lower time frame, we now identify this trend line after connecting the series of lower highs since the beginning of this month. So with this trend line figured out here, we said we are going to use this trend line as our yardstick for trading activity for today. So if at any point in time price action breaks out of the trend line to the upside, we said we are going to be holding on for price action to come back, do a retest of both the trend line or the 1,800, after which we have a buy stop order above the 1,850 to join the bullish momentum to the upside. And with a look of things here, if you look at what has been happening since the New York session yesterday, we saw the breakout of the trend line. We saw price action break above the 1,850 a little bit. We saw price come back to do the retest of our key level at the 1,800 with a candle which is looking more like a hammer candle, a structure, a pattern which gives us signs of buying pressure present around that area. And with this whole situation here, it's looking more bullish at this point. So a buy stop order right now above the 1,850 seems quite reasonable enough to be part of a bullish momentum to the upside. So let's keep in mind this setup here, and you might want to put your buy stop order above the 1,850 area to join that bullish move to the upside, with a stop loss sitting just right below the structure at the 1,800 with about 20 pips thereabout on this one. So let's scale back down into our 1 hour time frame. So that is what we are going to be doing today to guide this trading opportunity on this one. So we look out for buying opportunities above the 1,850 after witnessing the breakout retest of that trend line. So that is the only way we are going to be buying the Ethereum for today. However, we also talked about the potentials of sellers too in this market, as we said here that if price action breaks down the 1,800, which happens to be our key level which we identified on the daily time frame, that we are going to be looking out for more opportunities at the retest of structure to sell. So the only way we are going to be selling the Ethereum today is for price action to break down, retest the 1,800 on our lower time frame to be part of this move to the downside. So it's a very simple setup we have here, just right within the 1,850 and the 1,800 for an opportunity to trade the ETHUSD today. So like I said, I'm waiting for a breakout of the structure to join, so we have a buy stop order above that area. But if instead price continues to find lower lows, then a breakdown, scale down to your lower time frame, look out for a retest of structure, after which we want to be part of the bearish move to the downside. So this is what we shall be looking at today, and it's on this note I want to be calling it a day here on the Extreme Speed Live. It has been a wonderful moment with you guys, and I wish you best of luck during the New York session today. And remember that we have an high impact event which is coming up in about an hour 30 minutes from now. Ensure that all your existing open position is locked in. Move your stop loss accordingly to secure the position. I am of the opinion that we might likely be seeing a bullish traction for the XAUUSD today, but that is a thought. But we want to keep our ideas open. So let's listen to the market structure. We have already simulated all the potential trading opportunity that could happen on all of the pairs that we are monitoring for this week. So wait for price action to mature before opening any position for today. And it's on this note, I wish you best of luck once again, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well the pairs that we have been monitoring has been doing so far, and at the same time get ready for tomorrow's trading session. Do have a wonderful evening, everyone. I see you, Miyagigi. How are you, Miyagigi? It's been a while since I saw you. I haven't seen you this week so far. Trust you are doing well. 829, I see you. Valerie, I see you too. So have a wonderful evening, everyone. Bye bye.